Good morning, everybody. It's great to have folks here. Thank you for joining us today for this Campus Labor Coalition event towards a people's budget at UIUC, analyzing our university's finances. My name is Dan Gilbert, and I have the honor of introducing our distinguished speaker this morning, which I'll do in a moment. I also have the honor of currently serving as the co-president of the Campus Faculty Association. CFA strives to work as a voice for the shared interests of tenure stream faculty members on our campus. And CFA is proud to be part of the Campus Labor Coalition, together with our sisters and brothers from campus unions and labor organizations, including AFSCME, SEIU, GEO, NTFC, UFO, and IEA. Taken together, the organizations that constitute the Campus Labor Coalition represent workers in a staggering range of jobs here at UIUC. As we have said countless times on far too many picket lines, this university works because we do. While we have a strong tradition of solidarity on this campus, the COVID-19 crisis has brought UIUC's workers, students, and community members together in new ways under extraordinarily challenging and ceaselessly changing circumstances. We hope that today's conversation and further conversations and organizing in the weeks and months ahead will be part of creating a democratic, sustainable, and liberatory future for our university. We invited today's speaker to help us educate ourselves and one another about our university's financial health and budgetary practices. In this moment of crisis, and in the future that follows out of this moment of crisis, workers, students, and community members have critical roles to play in insisting that UIUC fulfills its mission of serving the people of Illinois. The Campus Labor Coalition has organized a working group devoted to pursuing the project of participatory budgeting under the banner of the People's Budget. We invite all interested people to join our efforts. You can send an email to campusfacultyassoc@gmail.com, campusfacultyassoc@gmail to get involved. And this morning, you're all invited to participate in this presentation by submitting questions to Professor Bunsis. Please type your questions into the chat. My colleague, Kathy Oberdeck, and I will help keep track of questions for Professor Bunsis, though I suspect that he's enough of a pro at presenting on Zoom at this point that he may not need much in the way of our help. And we want to thank Andy Bowman, CFA's intrepid staff member, for working overtime to facilitate this event. And this learning wouldn't be possible without Andy's labor. Okay, let me introduce our speaker. Howard Bunsis. I'm sorry, I'm reading. You can just type to the chat Andy, help me out. Should I type to the chat or to the Q&A?
I'll be looking at the chat.
At the chat, okay. Howard will be looking at the chat. Thank you very much. Howard Bunsis is professor of accounting at Eastern Michigan University's College of Business, where he specializes in governmental, nonprofit, and financial accounting. He holds a PhD in accounting from the University of Chicago, an MBA from the University of Chicago, a law degree from Fordham Law School, and an undergraduate accounting degree from Wharton at the University of Pennsylvania. He is a certified CPA and attorney. Howard Bunsis is one of the Academy's leading experts in the area of university finances. He has made hundreds of presentations like the one that he is about to share with us at universities around the country. In fact, he was here on our campus a few years ago, among a number of other occasions, during the faculty organizing drive that ultimately led to the recognition of NTFC Local 6546, the Union of Non-Tenure Track Faculty on our campus. In addition to his distinguished teaching and research, Professor Bunsis is a leader in the fight for workplace rights for campus employees. Among other things, too many to mention, he served for several years as the chair of the American Association of University Professors Collective Bargaining Congress. So please join me in welcoming Dr. Howard Bunsis to the University of Illinois.
Thank you, Dan. I appreciate that. I'm sharing my screen. It's good to be speaking with all of you. Good to be back. As Dan said, I was part of the organizing drive, a long drive over many years and ups and downs. And it's great that we have a union there. And gave several presentations along the way and walked the halls all over your campus. So it's good to be back. And obviously, went to Chicago and lived there. I was an Illinois resident for many years, and so it's great to be back and discussing this and see if I can do it. I mean, my goal here, and here's the roadmap, is to leave you with information so that you guys could really be advocates, and you are the strong advocates on campus. Someone asked me to talk about reserves. Yeah, certainly talk about reserves. In terms of this document, as soon as I mean, whether you guys believe it or not, I don't have a graduate assistant or any assistant, so I do all this stuff myself, except for our dog Stoli. He helps a little bit, but as soon as I'm sure that there's nothing I need to change, and hopefully that will happen after this presentation, I will send you this, and you guys could do whatever you like with it. In terms of the recording of this or the document itself, this is yours to distribute as you see fit. You don't have to ask me my permission on any of it. And so we are certainly going to look at where the money's coming from. We're going to look at what I always refer to as the orange book, the budget itself. Look at certainly both the system and the campus, reserves, debt, cash flows, investments, bond ratings. Dig deep into enrollment, price and discounts, and look at the priorities, number of faculty, staff, administrators, and some good stuff at the end. Of course, I think Dan knows I'm a huge sports fan. Though college sports is certainly a little different, and go Illini, and well, I'm a little upset because I'm watching baseball every day, and somehow the New York Mets are not playing, which is beyond my comprehension. Okay, so first I start off with where the money's coming from, the revenue distribution. And I have two different ways of doing this. Take out fringes. Let me talk about these fringes, this thing over here, and I'll just go back to the next slide. The fringes, this is just for UIUC, $424 million. And overall, by the way, it's about a $2.8 billion operation. It's a big place. And again, this is just UIUC, not the UI system as a whole. The way fringes work, it's run by the state, administered by the state. It's almost like it doesn't even count as a revenue because, yes, the university technically pays it, but the money comes directly from the state. So that's why I have it in without. This is very unique to the two states that do it this way are Illinois and New Jersey. These are the two states that handle fringes in this way, where it's just a pass-through, with the university is really just a pass-through for these fringes. When you take this 15% and add it to the 9%, you get more of a sense of the state's contribution. But still, the number one revenue source is tuition and fees. Grants and contracts, so much of this is about the research nature. Obviously, UIUC is a major research university, and so much is about that. I have a little slide, by the way, in case you're some categories. Let's just go over this now, if you don't mind. Tuition and fees reported net of the discounts. Grants and contracts, federal, state, local, private grants and contracts. 77% of the grants were federal grants. Three components for the state: operating appropriation, and we're going to focus obviously on the operating one. Auxiliaries: housing, dining, student union, bookstore, parking, athletics. Departmental activities. This is the exact definition: film rentals, sale of scientific and literary publications, testing services, university presses, dairy products, machines, shop products, data processing, and that's a large category. Federal grants, federal financial aid grants, plus the state grants. These are unique to Illinois. These MAP grants are unique to Illinois. And gifts directly to UIUC and not to the foundation. And so let me go back here, just trying to describe the departmental activities. That's the one I really wanted to focus on. Even though it's not a huge percentage-wise, but still a pretty significant number. As we'll see here, its departmental activity is $160 million. So it's a pretty big idea. This just gives you a sense of where the money's coming from. A lot of you have this idea that we're talking about the budget. And let me say this, a budget is a plan. It says, this is what we think we're gonna take in, this is what we think we're gonna spend. What I always focus on in all the different analysis I do is what actually happened. And the place to get that, the actual, are the audited statements. And there's a couple of things I need to say about this. The budget tends to look forward. And we have the 2020 budget, which I'll get into in a bit. The financial statements look backwards. But the big issue in Illinois is the financial statements for the University of Illinois system do not include any campus-specific information. Now, there's only 3 campuses and plus the central administration, but they're not broken down. So we have to use other sources to get it, and I'll talk about that as well. So this is the budget. You could see the numbers, these are in thousands. So that's $3 billion per the budget and operating revenue. They have something called budgeted revenue by source, and then when you add which doesn't include the fringes, and then iPads, I guess I'll use the chat. Is integrated post-secondary education data system of the U.S. Department of Education. That's what iPads is, and Dan was, someone there was able to get me the 2019 iPad stuff, which was critical in this analysis. It really helped a lot. I used it. It's used, these 100 slides, that 2019 data probably shows up in at least 20 of them, if you could believe that. So really appreciate you guys doing that. It helped quite a bit. So that's it. In terms of the financial information, I just want to say this. There are three systems that are similar to U of I: SUNY, yours, and University of Massachusetts, similar in that they do not report campus-specific information in their statements. SUNY does have 64 institutions. All of these systems do. What I mean by that is these systems I have here, they do report in their audited statements specific financial data, including reserves, et cetera, cash flows, all that, on the individual campuses. But the UI system does not. And personally, I think it's something that the unions at UI and UIC and UIS should get together. We were able to do it in California. The California State University system tried about 7 years ago to stop reporting the individual campus information. They have 23 campuses in the California state system. The University of California system has 10. And through legislation that was pushed by the unions there, called CFA, California Faculty Association, not the same as yours, but they were able to do that. And I think it's something that you guys should consider in trying to shed more light, because as you'll see, I have to extrapolate a lot of the information to get what's going on, to figure out what's going on at UIUC. They have the data, they make the statements. They just don't share them with us publicly. And so I think that would help a lot. Here's looking at the main revenue sources over time. The state operating appropriation has moved around quite a bit and is not a major source, so it is still significant. Grants and contracts, but you can see tuition. It's driven by a couple of things. I mean, this increasing orange line. Enrollment is number one, price number two, and number three, mix of students. Fewer Illinois students, more international and out-of-state students. So the international students went down this past year, as we'll get into. But it just gives you a sense of what's going on. And really, UIUC is asking the students and their families in your state to cover more and more of the burden of higher education. I think the idea that higher education is a public good, we're fighting a losing battle, though I think some people, some politicians and others are trying to do something about that, but still the numbers, this chart suggests otherwise. So now I'm going to look at what I call the Orange Book. here's my thing on budgets. The word starts with B and ends with S. It's really misleading and hard to interpret. And the actual financials really work a lot better. And most budget models, and they have these models about responsibility-based budgeting and all this kind of stuff. It just wants to do these things: hiring, furloughing, or limiting as many liberal arts programs as possible. That's not really happening at UIUC. These things are not really happening, though the hiring of tenured faculty hasn't stopped, but as I'll show you, it's not quite where it could be, but they're not eliminating programs. That's not happening, though it is happening elsewhere. So I just want to make that clear. Why I favor actuals: they tell us what actually happened. They're created by an independent outside auditor using standard principles, and the bond ratings rely on these. Budgets are created by the university administrators, not required to be audited or reviewed, not subject to any standard accounting rules. They're just plans. And it's where you get the pronouncements from your CFO, from your president, from your chancellor. Oh, we have a budget hole. Oh, we have a deficit. That's just there's no pure concept. Deficit, whatever you want to call it. This tells me, do they really have taken less than they spend? And we'll see that. So I do want to spend time on the budget based on the questions that were given to me. And there is some things to be learned from it as well. So, and I don't have the 21 budget. We're in fiscal 2021. I think there is a budget. It just has not been, I think at most places, I think it's fair. It's October. I think that thing takes a long time to put together and publish and create all that. So I think we're sitting here on October 2nd. I think by the end of the month, we'll see the 21 budget on your website, on the system's website. But for now, we don't have, but we still have 20, which is good. It's nice and current, and you can see the main revenue sources. And the good thing is the main revenue sources are going up. You could see tuition was budgeted to increase, auxiliaries, and grants and contracts. Obviously, these things were done before the coronavirus, and we'll address all of that. But in general, that's the number one thing I like using a budget for is, do they think the big items are going up or not? That's what I like to use it for. And that's what you see on this slide on page 12. Now, the state appropriation, regardless of whether you think it's 11% or 26% or 30% or 20% of the whole thing, you as campus leaders and advocates have to accept that the administration and the people who run your universities are going to say the state is killing us, even though tuition is a much larger contributor to total revenues, even though grants and contracts are. They always make we can't spend this money on that, we have to talk about the appropriation. And so what I do here is break it. I mean, this breakdown isn't all that relevant, to be honest with you. I just put it in here just to show you where all the different things are coming from in terms of this appropriation that's in the budget. And in general, I think what's going on in 21 is more important, as I'll show you in a bit. So here's 21. And this is to all of UI. I don't know exactly what is coming in 20. When I see the audited financial statements for 20, and the year ended in June, we'll see those financial statements probably in a month or so, maybe a month and a half. But you can write down here, I know these numbers are small. That's 628 million versus 620 versus 601 million in 19. This is to all the three campuses and the central admin. And it's going to be almost exactly flat. This is the big one. I mean, I can't emphasize what a big deal this is. In many states, we haven't settled, even though we're in fiscal 21, that amount is still being determined. Michigan's was passed Friday of a week ago today. Michigan passed their final budget a week ago today. And like Illinois, it's almost flat. I think in both Michigan and in Illinois, the reason for that flatness in the appropriation is that the tax revenues actually were larger than the legislators had previously anticipated. I cannot emphasize this because so much of what administrators are using to justify furloughs, layoffs, or other cuts is, oh my God, the state's going to kill us. Now, someone asked about FOIA on the financials. I don't think they'll tell you they don't exist. FOIA works when you have a definitive document that you know exists. I'm not. I think they have them, but in a FOIA process, and we've been through this, I don't think you're going to be successful getting it. I think if we FOIA the UIUC campus-specific financial information within the UI system audited statements, I'm not so sure what we would get. I think it's worth discussing and trying, and I could work with you guys on this. And by the way, you know, after this is over, I expect the people on this call, you could email me anytime. There's no meter running. There's no money. There's none of that. I'm not going to charge you anything for, and I will get back to you. I mean, I'm yours forever now. So you guys could ask me stuff and we could figure out how can we possibly get that stuff from them. But this is a big deal to me right here. I don't know exactly what's coming to the university in total for the cash flow. This is for the whole system. And UIUC, as I'll show you, is roughly 40%, 45% of the whole system. But this is the fringe stuff all over the map. The state is a mess. It really is. And I think that is so important in the way UI is seen financially. Oh my God, the state, and it's the pensions that are killing us. These fringes are killing us. The state has no money. Well, if the state had no money, they wouldn't be keeping this appropriation flat for 21. In so many states, what we're talking about is 15, 20% drops in these things. And Illinois, it's passed, it's done, so that's great news. Overall, and this may surprise some of you, Grapevine is from Illinois State University, by the way. That's where they collect data on the appropriation for all of higher ed. But this is for all of higher ed, not just UI system, the University of Illinois system. But Illinois is toward the top because the fringes are in here. The fringes are in here, which makes this kind of big. Now, here's this. I just had to. You can't not discuss this. I mean, I could have omitted it, but I just have to. It has to be reported. These are the bond ratings of the 50 states, the Standard & Poor's bond ratings as of September 1st, which is obviously just a month ago, 1 month and 1 day ago. And there's Illinois, the lowest bond rating of any state in the country. And administrators love pointing this out in the UI, say, oh my God, we have no money. But again, that flatness in the appropriation is critical, and we'll get to the bond rating in a bit. You can see 15 states, even today, in the midst of a coronavirus pandemic, where everyone says everything is falling apart, and ignoring the news that came about 1:30 last night. Of course, I was up. I was finished with this. I wasn't working on this, but sorry, I finished during the day yesterday. But we certainly were shocked in this house. I'm sure you all were on the news last night on the president. But look at, the three highest ratings, 40 of the 50 states are there. And you can see, well, and by the way, I guess I'm doing I was saying to Dan, working on an arbitration with Rutgers, working on that, and Penn State as well. So it's not a surprise that the ones in California, the states I'm working with are the ones that are down here. So that just has to be reported. In terms of the overall budget expenditures for UIUC, this is just your budget now. There are several ways. I have here one way of reporting expenditures in the budget. And you could see you get all these different, by the way, this AFMFA is a separate student charge for maintenance that they hit the students with. That's what that is. The AMFA, in case you don't know what that is. reserve transfer. Oh my, give me a reserve transfer. This is just, just have a lot of freedom within this budget, as we'll see again and again. Debt service and reserve transfers. Again, this is just flexibility. There's a lot of flexibility in this budget. For 2020, I mean, look at the inconsistency just between 19 and 20 in the way the budget is presented. This category, supply services and equipment, has 649 million in it in 20. It only had 81. All these other categories are zeroed out in the 20 budget, and they're all part of this. It's kind of, I'd rather not see that, but that's it. Another way of breaking it down is, I think, the way that all of you on this call probably are more interested in, and that's breaking it down by the units, the colleges, the departments. There was a question asked me about public safety. We're going to look at that. And there's athletics. Yet another way. This is just another kind of breakdown of this stuff here. And the total spending, 3067. You can see it here, 3067 kind of matches up there. 3067. And this is just what I'm doing here is breaking down some of these things here. This is like, these are the departments, and this is like the other stuff. I mean, these are your academic things, and these are Vice Chancellor Student Affairs, Division of Athletics, Provost, Energy Service Facilities. And these things are obviously liberal arts and sciences. I think many of you are in there. So the budget in 2020 for liberal arts and sciences is $234 million. It was $227 million the year before. Engineering, the largest college, went down. And someone had asked about diversity. There's a vice chancellor for diversity. That's $2.2 million is in that budget. So these are more purely administrative and non-academic functions, and these are mostly academic functions. Mostly. Most of these are colleges, et cetera. I looked at the biggest winners and losers from 19 to 20. The biggest dollar winners, the vice chancellor. This is a $22 million increase from 19 to 20, the vice chancellor for research. Agriculture College, liberal arts. The biggest dollar losers, surprisingly, engineering, grad college, because engineering is the largest college, as we'll see. The biggest percentage winners, provost academic programs, school of social work, vice chancellor research. The biggest percentage losers, and this is a small number though with a graduate. They've lost $6 million, which is significant, I guess. And those others, the biggest dollar winners on the other side. This is on the non-academic-y side, if I may. Programmatic resources and central costs. I mean, sorry. This thing here, programmatic research and central costs, it just reeks of, that just gives the people that run your place incredible flexibility. Sorry, I went too fast. Incredible flexibility in what's going on. And really is pretty, there we go. It gives them just a lot of flexibility in what's going on. Vice Chancellor Student Affairs lost some big percentage increases in diversity, in the Vice Chancellor for diversity. Shocking. Athletics. So, all right. What is this general use category? I just had a look. I highlight it with administrative discretion. Yeah. Programmatic resources. The green shaded cells represent funds the admin can spend for almost any purpose. Tuition and indirect cost recovery, earnings, contingency, investment for growth, renovation reserve, strategic contingency. This just gives them a lot of stuff to play with. Oh my goodness. You don't usually see budgets with this kind of stuff in there. In terms of service and maintenance into SEIU, certainly we have stuff on the people who work in service and that kind of stuff. Fringes, fringes, to me, the main ones, of course, are retirement and healthcare. But it also includes things like workers' comp, unemployment, payroll taxes, things of that nature. So, all right, went too fast again. All right, specific budgets related to diversity within the overall budget. I was asked a question in terms of how much is the university committed to overall diversity issues. So I went through the budget line by line, and the LAS budget has 69 different items in it. And these are the ones I thought were of interest: women and gender studies, women and gender and global perspective, African American studies, Latina studies, Asian American studies, Center for African Studies, American Indian studies. There were other items that I could have put in here, but I thought these were the ones. And you could see the total spent on this is being spent in 19 was 4.2 million, went up to 4.6 million. Within LAS, just look at this. There's a $234 million in LAS 2020 budget. The number 1 and 2 categories are LAS general expenditure and LAS administration. These are budget categories. I'm not saying there's anything wrong or evil about them. I'm not making that statement at all. What I am saying is that these budget items for general expenditure, administration, strategic reserves, this all gives the people who run your campus a lot of flexibility. That's what it does. At the bottom here, check this out. Oops, sorry, not being able to. So the vice chancellor for diversity, that spending is 0.1% of the whole budget, and all these programs above are 0.2% of the total budget of $2.3 billion of spending. So, a question was asked to me about policing, and this is the Police Training Institute specifically, $308,000 in the budget. It was up $2,000 from last year. And it's 0.01% of total spending. So there you go. All right, let's look at some ratios. This is the system as a whole. I have to do the system first, then we'll get to UIUC. So this comes from the audited statements. The assets over does not include the foundation. I am not including the UI Foundation in here. We're going to get to that in a bit. Over $8 billion of assets, $5.3 billion of reserves. How much of these net assets are reserves? So the blue is equal to the red plus the green. And we'll look at this $3 billion of liabilities to see if there's too much debt. Overall, from 2008 till now, 12 years, that's tremendous growth. You can see the net assets are growing, liabilities have stayed pretty flat, and assets are growing. So what I have here is say, okay, there's no campus-specific information. My chat is not set to all panelists? I think it is. Okay. The difference between the Division of Public Safety and Public Safety, I do not know the difference there. In terms of fringes, to me, that's the fringe assessments. To me, that's all them just making stuff up. I think they just say whatever they want to say about fringes. That's my view. And they say, oh, fringes are going up. We have to pay more. And I'll show you the benefit rates that are used here are absurd, as I'll show you. So what I'm trying to do here is saying, okay, I've got the UI system. How big is UIUC within the UI system? So I looked at assets, 54%, liabilities, 52%, and total expenses, 45.7%. Going back 2017, before there was a change in accounting, as I'll talk about, UIUC was about 42% of the unrestricted net assets, which are the unrestricted reserves. UI. Look how much the central administration keeps. Look at that. Looky here. Unbelievable. They keep so much. Enrollment, 89,000. This is fall 19. This is the fall 19 enrollment. We have fall 20 numbers for UIUC. I don't have them for the system as a whole, but we have them for UIUC. But you can see UIUC. So this just gives you, with this slide, 25 gives you a sense, how big is UIUC within the UI system? Roughly half. Some things a little less, some things a little more. What makes up that $8 billion of assets? Again, none of this includes the University Foundation or what's called UROs, University-Related Organizations. The green are cash and investments. This is not, again, not the endowment. Not 1 penny of this green stuff is the endowment. This is over $3.6 billion of cash and investments outside of the UI Foundation. It grew from 1.3 billion 11 or 12 years ago. Why? Because every year they take in more than they spend. It's that simple. That's not a bad thing. The capital assets, 3.2 billion up to 3.8 billion. You know, I've been on the campus many times, and obviously I've seen some construction. I've never noticed, this is not a campus where there's constant construction, and you guys could tell me now. But not a huge amount of that. So, and other assets are not that large. These are the university-related organizations. It is dominated by the first one, but these are the other ones that are in there. These are kind of kept separately. And so this is the balance sheet of the university-related organizations. I just did 3 years. This is the cash and investments have gone from 900 million up to 2.2 billion. And it's, like I said, dominated by the UI. And we'll see the relationship between the UI Foundation and UIUC in a bit. But again, none of the reserves am I including from here. Here we go in terms of the support. So in 18 and 19, the UI Foundation gave about $200 million to all of UI. So they covered about 3.3 or 3.6%. So UI as a whole, roughly $6 billion. The UI Foundation covered 3% of those expenses, 3.5%. How much was distributed? They have about $2 billion of assets. They distributed about 10% of the assets. They distribute every year. So I don't know if that's good or bad. I'm not going to bore you with detail, but we had to make it, all the systems, public systems, we have to make an adjustment. I'm just going to point you right here. In 2018, UI, like every other public university in the country, picked up retiree health as a liability on the balance sheet, $1.3 billion. It's not a real liability of UIU system or UIUC. It's a liability of the state. And so I just make adjustments for that. I'm not going to bore you with the technical part of the adjustments. Just to say that what I'm doing is what the bond rating agency is doing. And the bond rating agency properly make these adjustments. And there is no way UI would have the high bond rating it does if the adjustments were not made. So, all right. In terms of net assets, the system has 5.3 billion of net assets and about $2 billion. This is, again, just the system. We are going to get to UIUC. Just bear with me. $2 billion of reserves, of unrestricted reserves. What is the university going to say about this? Well, first, this is the stuff. There's 4 different categories of net assets. The first 2 don't count towards reserves. This one is the buildings. Can't be sold. Just leave those aside. This one here, net assets set aside for a specific purpose. And these have to be, they counted in the reserves, but they can't be spent on anything else but their purpose. And we'll talk about what those purposes are in a bit. These are unrestricted. And this is what the university is going to say. They're going to say, we can't spend it. That the reserves are designated by board policy for student initiatives. Even if we wanted to move funds, we're not allowed to do so. And here's reality. If there's a firm no way you can get out of it commitment. The external auditors would put those funds in the restricted expendable category. But the board may have voted for certain initiatives, but those priorities can be changed at the discretion of the board. So going back here, this $2 billion, they are going to say it's in the departments. It can't be spent. It's already spoken for. There's no way we have it. But that's just not true. I'm not saying they should spend them all down, but the UI system, and as we'll see, UIUC, I'll just give you a little preview. UIUC is about 800 million of unrestricted reserves, because they're roughly 40% of the whole thing. And they'll also say reserves should not be spent on recurring expenses such as faculty salaries, and we just can't do that. Well, no, they shouldn't be. But this is exactly what reserves are for. The coronavirus situation, where there's supposedly temporary reduction in revenues and some additional expenses. This is exactly the situation reserves are for. If you don't spend reserves now, sorry, now you can see my chat. If you don't see reserves now, you don't use reserves now. When are you ever going to use them? What are they for if you don't use them now? So this is a chart of the unrestricted reserves and the restricted reserves over time of the UI system. The growth is really significant. They had negative unrestricted reserves in 2009, of negative 234 million. Now so in 10 years, reserves have gone from negative 234 million to positive 2 billion. Moody says there's just under 3 billion reserves. Okay, I'll agree with that. This is the restricted expendable net assets set aside for scholarships, academic programs. They have to be spent for these amounts. They can't be spent on anything else. But the bond rating agencies include them. Why? It's really nice to have 150 million set aside for capital projects that you know you have signed up for. You have it set aside. And that's what these things are. What do we do with these reserves? We compare them, we take the total reserves, and we compare them to total expenses. So the primary reserve ratio, and hopefully you'll see in the chat, I'll just do the math, 46.3% for 2019 is equal to 2,655,830 in my numerator, and my denominator 5,730,781. That tells me that the university system has 5.6 months of expenses in reserves. Anything bigger than 3 months is solid. You could see it wasn't always that way. I mean, look at that. Hopefully you guys see the cursor. Highest it's ever been, which is great, of course. And what I have here, a solid level is generally 25% of expenses in reserves. And you could see UI system was below that all the way up until 11. Now things are looking pretty much better. Is there too much debt? Absolutely not. The level of debt has remained fairly constant over these last 11, 12 years as the reserves have grown. And a big ratio indicates that they have more than, they have more than twice as many. So that's good. This is better. I think this is better than the numbers to me. Cash flows, complicated, but this is just the cash. And you can see a big drop in the cash in the state appropriation from 18 to 19. But still, they generated all the cash in, cash out for what? Paying interest, scholarships, supplies, and the big one, paying employees. $556 million net operating cash flow last year. Now, I do not have data on energy or consumption. I do not have that. That's not financial data, so to speak, in terms of operating expenses. Though we will get into operating. We have not broken down expenses yet. We will get into those things. The 11% cash flow margin is 556, 536 over the total revenues of 5074526. It's a nice margin. They're generating cash flows every year, which is great. Three different constructs I want to talk about with cash: stocks, bonds, etc. Net cash flows, which is every year, what do they take in versus what do they take out, and then reserves. And most of the reserves are unrestricted. When I say most of the reserves are unrestricted, what I mean by that, sorry to go back. This lime green is bigger than that dark green at UI. It's not, some places it's not the case. Some places it's the opposite or they're close to each other. But here at UI, most of the reserves are unrestricted, which is good. So here we go. Bond ratings. You have Moody's and S&P. Slightly different results. So June 20th, 2020. That's how many, let's say, July, August, September. 3 months ago. A1 with a negative outlook. That's what happened. Market strength, Big Ten Academic Alliance, flagship, large base of operations, liquid reserves of nearly $3 billion, cash for investments, including the foundation of $5.7 billion, and debt's manageable. Challenge, and it's all about the state. UI's potential exposure to further deterioration of the state due to coronavirus, and the state gets nearly 30%. This includes the fringes. The linkage to the state makes UI subject to potential fiscal stress, especially in the face of the pandemic, and flat funding. This is good. I mean, I thought this was not really a challenge, but I think that's good. The flat funding, we talked about that. But the reason you got the negative outlook from Moody's, it's all because of the linkage to the state. Different story with S&P, June 18th, 2020. So, 2 days prior to that. The universities, and so outlook revised from negative to stable. So it is opposite of the negative rating outlook. The outlook is just what we think is going to happen in the future. The letter rating stayed the same in Moody's, and they have different letter rating systems, which I'll show you in a bit. So revised in April, the outlook revision reflects our opinion UI has sufficient balance sheet strength. So again, if you don't believe me that there's a lot of reserves here, believe them. During the outlook, the university's operations will likely remain near break-even or positive on a full accrual basis. Large and growing enrollment, significant research, financial profile is strong, positive operating performance, that's the cash flow, solid available resource ratios, that's the reserves. And here, look at this. I found this really interesting because it really addresses the state. An indicative standalone credit rating of A minus. In other words, if you were not linked to this state, the state of Illinois' problems, the rating would be several ticks higher. The A minus rating on UI's bonds reflects our criteria and application of the subordinating government cap to standalone credit profile, limiting the rating to 3 notches above the state. So the university's final long-term rating is A minus. They wanted to go higher, but they couldn't because they can only go 3 notches above where the state is. They have their rules, S&P, which are understandable. So the state is certainly taking you down, but UI is not the state. And this is UI's bond rating. It would be here without the state of Illinois. And the dark blues are the privates, the light blues. I should have made this arrow come down here. These are the publics, but it's relatively the same. The relative is basically the same. There's more trouble down here with the privates because they're smaller. There is some trouble in the publics, the lighter blue. And here are these are the peers that your university administration has chosen. These are the 9 peers. And 1, 2, 3, 4 of them have AAA for both Moody's and Standard & Poor's. University of Washington has AAA for Moody's, but not quite Standard & Poor's. So this is in the face of a coronavirus. Look at these bond ratings for these universities. So in terms of UIUC, We have IPEDS data. We could extrapolate the reserves by looking at those percentages. So what I mean by that, if the UI system has 2 billion of unrestricted reserves, we extrapolate / estimate that UIUC unrestricted reserves are roughly 40%, a little higher, 40% of the 2 billion, or 800 million. IPEDS does report UIUC debt. We can estimate the cash flows. We can't determine the amount of cash and investments on UIUC's balance sheet. So that's all that. So what I have here on 47, see, we're almost halfway done already. This is UIUC's balance sheet. And here are the unrestricted reserves, actually 870 million. And this is UIUC's balance sheet. Looks very much like UI system, obviously. You guys are half the system. So there you go. And UIC is similar. And these are reserves over time. Here I got the unrestricted dark, the other one lighter. I just did it to, I flipped the colors to, because it was different. All right, compared to expenses, reserves are solid. University's got almost 6 months of expense in reserve. A lot of flexibility, which is nice. It's nice to have it. Compared to debt, reserves up, but debt flat. And trying to estimate the revenues and expenses. These revenues and expenses come directly from IPEDS. So in 2019, revenues were 2.8 billion, expenses 2.6 billion, a surplus of about 2.2 billion. However, there's a huge non-cash expense for depreciation. It's the estimated decline. It's non-cash. When you add, so let me do some math for you again. Sorry to do it, but I'm doing it anyway. 372, 804, 886 equals 229, 972, 409 plus 142, 832, 477. That's the estimated cash flows for UIUC in 2019. But you can see since the last 3 years, just from what they report to IPEDS, revenue is bigger than expenses every year by quite a bit. All right, got to dig in now to enrollment. This is really an incredible story to me as someone who does this a lot. This is a huge place. UI is a huge place. UIUC. This is just UIUC. So I'm using on the enrollment data the census 10-day student statistics. So we have it. The 2021 is fall 2020. That's what 2021 is. And that's really pretty, and it was put on the website very, within a couple of weeks now. So really, I can't get you more current than that. It's really fresh off the presses data for 21. The professional schools is mostly just law school and veterinary school. As someone who's went to law school and who loves animals, I'm all for those things, of course. Undergraduates in 2009 was 75% of the total enrollment. By 2021, undergraduates were only 64% of enrollment. Obviously, a big growth in graduate programs. It's a big thing here. I think there's a lot of, I could be wrong, but from what I'm reading and sensing, there's a big increase in online graduate programs. Is that accurate? Could someone tell me if you guys feel that too? Okay, thank you. That's a yes. That's a yes. Okay, just asking. Just asking. I want to make sure that you guys are still out there listening to me after 45 minutes of babbling on here. I just want to make sure you guys are still with me. Big increase here. The business schools, some of that is a large part of that, as we'll see. But this is very impressive growth. Oh, went too fast. Didn't mean to go that fast. There we go. Slow down. So these are the annual changes in numbers and percentages in enrollment. I want to focus on the gray in the bottom. Look at this. Every year, big increases in enrollment. Unbelievable. Unbelievable. Economy up, economy down. You know, business and small programs. I usually have a graph where I graph where enrollment is kind of bouncy. I graph the unemployment rate and change it. I lag it 1 year because that's what you guys taught me, or someone taught me. You lag it 1 year, the unemployment change with the enrollment change. But here, I see nothing but up. It's unbelievable. It's really incredible to see this kind of growth. And we're going to talk about what happened here in a second. So this comes from the Illinois News Bureau. I didn't know that existed. And they said that this is the official statement that came out 3 weeks ago. So this growth is primarily due to online graduate programs, particularly those using the Coursera platform in the, how do I pronounce that? I don't know, the College of Business and the College of Engineering. In your College of Business where I've been, 42% of graduate students are enrolled in fully online programs. So, yeah. I also break it down long term. So I broke down the enrollment from 9 to 15, 15 to 21. So 2 subperiods. I just broke it down into 2 subperiods. You can see the big increase in grad enrollment in these last couple of years. Though these are still pretty impressive. These are number of students. Down here are the percentages. So total enrollment from 9 to 21 has gone up 26% in this 12-year period. It went up 5% from 9 to 15 and 20% from here to here. You can't just add these for obvious reasons, but they're close. The students you could add, 10,800 students more than 12 years ago. I'm sorry to go back, but just bear with me. 41,000 to 52,000 students. Oh my. That's just, you don't see that anywhere. Nowhere, and do I see that kind of growth in enrollment. Doesn't happen. So you guys should all, congratulations. I think it's great news. Okay. I know this isn't, look, to me, this is what's on the screen now in 58. This is just information that you guys should have. I assume there's people from a lot of these different colleges and schools that are on this call. And I am not suggesting one is bigger or better than the other. I'm just giving you information here. There's that big 1,000 student increase in business right there. Over time, like aviation went away, the medicine came upon us. There were some changes in names. The School of Information Sciences used to be the library. The Center for Innovation and Teaching used to be called Online and Continuing Education. And I went back all the way just to kind of get a sense of these things, and just to see. And I put these in order of here. So that's another way of breaking down enrollment. I think you all know these kind of things, but here you now see it on a slide. So, and I am not saying one is better or bigger than the other. Not at all. You're all, this is a huge comprehensive university. Everything is important. So I just looked at the largest academic colleges here, and the growth in business and engineering over this 12-year period is really incredible. And a real story here in education, 20% decline from 9 to 15 and a 76% increase over the last several years. Very much in contrast to the way colleges of education in the Midwest are going. So something happened, something good happened there. You could see education was down 298 students, is now up 866 students. I don't know if this is an online program. Marketing is different, but it's just very good to see that. And again, there's that 26%. And so I'll leave it at that. By geography, this is important because I think so much of what the administration is going to say is that we lost our international enrollment and therefore we're in trouble. Well, first of all, from 20 to fall 19 to fall 20 or 20 to fiscal 2020 to 21, enrollment's up. In the state of Illinois, I found it interesting that over this 12, 13-year period, the number of students from Illinois has even gone down flat slash gone down a little bit. International student growth, 5,700 here. It peaked here at 11,000, almost doubled over that 9-year period. Look at the decline in international students from fall 19 to fall 20. I assume the coronavirus is a large part of this. It's that decline in international students is true for both undergraduate and graduate programs. But look where the change occurred. The change occurred in other US states, that other being any state that's not Illinois, in both undergraduate, especially graduate programs. From this, I'm talking fall 19 to fall 20. Big increase. So that's why the overall enrollment from fall 19 to fall 20 is actually up, though international enrollment is down. So the percentage distribution of enrollments by geography, this is the percentage of students from Illinois. As I said earlier, I'm not so sure your legislature would like this, but you're a major research institution. That's why people come there. So international students, again, I'm focusing on international students because this is so much of the discussion now. Good question in the chat on future state appropriations. The question that was just asked, I'm sorry to go back because I think it's an important question. The question I'm reading from the chat, will Illinois' terrible bond rating situation lead to major reduction in state appropriations in the future? I was very surprised and happy that the appropriation for 21 did not go down. But the bond rating agencies, the reason the bond rating for the UI system, and in essence UIUC, is not as high as it probably should, could be, is because of the question the question mark at the end of your question, and Kathy Oberdeck's question in the chat. People are very uncertain about what's going to happen with the state. You have an election coming up where a change in the state income tax is being proposed, a change from a flat rate to a graduated system. I can't tell any of you, I'm not going to say vote for this person or vote for that person, but I think I can say to the advocates on this call, I could tell you from my experience, a graduated income tax is fairer. A flat income tax is more advantageous for very wealthy citizens. And my state, Michigan, also has a flat income tax. Though we don't control, we have the governor's office, we don't have the House or the Senate, so that's why something like this would never be proposed in the current political structure in Michigan. But if a graduated income tax is a big deal. And so I do think that if that does pass, if the tax change does pass in Illinois in November, I think that will go a long way towards solidifying consistency in the appropriation to UIUC and the UI system going forward. And I don't know if you guys are, will you guys tell me, are you guys engaging on this issue, or is this something that people don't even pay much attention to, the tax vote? It's hard for me to say. Are you guys paying, my question to the group is, are you guys paying attention to the tax vote that's on the ballot? We probably should be. SIU is pushing it big. I can't stress how important it is. It's something that I'm glad to see the unions are endorsing it. GEO has endorsed fair tax. It's something that administrators and union people can get together on. Certainly I'm no administrator and never have been, never will be, but at least who knows what they want? I mean, I don't know if they want it or not, but they should be for it. And I really think it's something that you guys should be pushing, because that question it really underlies so much of the justification for your administration in furloughs, layoffs, and not spending more money on things they should be spending more money on, which is people. And they use the state as a crutch. And if this tax bill passes, I think that goes a long way towards decreasing their argument. So anyway, back to the enrollment. Graduate students, you could see the big decline in graduate students, a percentage of graduate students that are international over the last several years. So this tells me back in 2017, 1/2 of the grad students were international. Now that's below 30%. Undergraduate, between 10 and 20% are international. and it's coming down. Professional, much the smallest percentage. And total, it's about 18% of your students overall. That's what that is. So I looked at the growth of UIUC versus your peers. 19 is the most recent year I have in iPads. And this is UIUC, and that's the 13. So this is just, I have two different scales. The scale on the left is the number of students. The scale on the right is the percentage change in enrollment. This is just, let the rich pay. Yeah, it's just me showing off my Excel skills. So you could see University of California, San Diego has a higher growth in this period, about the same as Berkeley's, but you guys have higher growth and are almost the largest institution here. It's hard to have a large percentage growth when you're this big. So this is just demonstrating that the enrollment growth is not universal, and that what's happening in enrollment at Urbana is something very different from other places. The tuition and fee price, I have undergrad in-state, undergrad out-of-state. The grad numbers were really hard to, you have so many different tuition numbers for grad that it's hard to figure out what it is because every program's got a different price. Undergrad, they do a better job of the published sources of collating this number. And that's a total sticker price. And there's a small increase, as we'll get to in a bit. Tuition out versus in, this is telling me 2.40 means it's 2.4 times more expensive to be an out-of-state student than an in-state student. Really hasn't changed that much over the years. And so these are the percentage changes in, I see something I have to change. This is the long-term changes in tuition. You can see there's been a small tuition increase the last couple of years, then from 11 to 16. The discount rate. This is the sticker price. Let's go down here. They took in, this is the discounts, and this is what the UIUC actually took in. So the 23.5%, if I could do some more math, is the discounts and allowances, 44 million. That's the amount of scholarship it's in aids over the sticker price. This is for all students, undergrad, grad, international, every program imaginable. You can see the discount rate has increased over time. The administration is going to say it's much higher. They tend to report the rate for first-year students, which tends to be significantly higher than this, probably 10 points higher. But still, that's the discount rate. It has increased over time, but not tremendously. And so here, I compare, again, to peers. Again, I have two different scales. On the left is the undergraduate in-state tuition and fees. Probably should make that clear. That's 67. I'll make that clear that that's undergrad in-state. I've got to make that clear right there. Sorry. That's undergraduate. So this is your undergraduate, going back a couple of years, that's what we have for our iPads, and the discount rate. And you guys have the third highest tuition here, but the third highest discount rate. So there's the tuition compared to the others. North Carolina, University of North Carolina, Chapel Hill, why they're so much lower. And I've been to North Carolina and presented there a couple of times. In the state constitution of North Carolina, it says that public higher education should be free or as close to free as possible. Now, I'm not saying this, certainly that's not free, but it really is built into their the culture to make college affordable in the state. And this is the flagship. This is Chapel Hill. So there is a significant difference there. Here are the annual changes. And so I have three different things going on here. I've got enrollment, which is the orange. These are the annual percentage changes in enrollment. The lime green is the change in the tuition price. You could see the annual changes in tuition price were much larger back here 7, 8 years ago than they are now. They're basically nothing. They went up 2% for the current year. Last couple of years was basically nothing. The tuition was basically flat. Fees went up a little bit. And then the darker green is what they take home in tuition revenue. I don't have a dark green bar for here or here because we don't know the numbers yet. This number, where my cursor is, we're going to know fairly soon. When the 20 year ended in June of 2020. It ended June 30th. we're in the middle of the year now. Prediction, the dark green here will be, I think, right where my cursor is, close to 2% increase in tuition revenue. What does that mean? The number one revenue source is going up 2% and going up every single year, which is great. Okay, let's talk about the coronavirus pandemic. And this, to me, this is different than anywhere I've ever done this, because here I don't have state appropriation drop. When we did this for Wayne State, I'm working on Western Michigan. I've got Michigan on both sides of me, and obviously I live here, and obviously work with the people here closely because I've lived here so long. But the state appropriation is going down in Michigan a little bit, but not what we thought it was. But still, you have this flatness in the appropriation, the increase from 19 to 20, and then the flatness from 20 to 21. That's all this is saying. So this is all of UI, and then I extrapolated the same for UIUC. I don't know for sure, but there's no way it's going to be that different, that your appropriation UIUC is going to be that different from the whole system. Can't be. At the same time, we got enrollment going up. We got enrollment up. We've got the price going up. Yeah, there may be more discounting, but when you've got enrollment up, price up, state appropriation flat, and I say here, the state appropriation be flat, this is a huge deal in contrast to most states, absolutely. And if they ever dare say, oh, we got investment losses to worry about the stock market, then they don't know what they're doing, because the S&P 500 from the end of fiscal 19 to the end of 20 went up 5.4%, and so far it's up 8.5% this year. So if they ever dare mention investment losses, which some places have done, then they should be skewered, because that's just not the case. There are going to be auxiliary losses. I know the kids are there, but probably fewer. It's hard. I couldn't get a handle on exactly how many. I do know from the common data set, 50% of your undergraduate students live on campus. Almost all your first-year students do, but 50% of the undergraduates do, or did in fall 19. This is a fall 19 number. So, first of all, just look at this data, by the way. The auxiliary budget revenue, this is what's in the budget, that the revenues are actually a little less than the expenses, about 300 million. iPads, you get a different story. And who, by the way, iPads, I don't make up the iPads numbers, your administration. Housing is approximately 2/3 current capacity. Thank you for that, because that comment right there from Ricky Baldwin, we're going to get to on, just hold that thought to the next slide. They submit, the administration submits this to them. This is the whole systems. This is not just UIUC. And we're going to get to sports. Don't worry, I love sports. I'm not leaving you without sports. This is the ticket sales. Football ticket sales in 18 and 19, $6 million. I know you got, I believe Levy, I assume Levy Smith is still your coach. Is that a yes, that he's still your coach? Yes, okay. And I know there's a lot of optimism about U of I football. There is. I mean, there was probably a lot of optimism coming into the year about UI, because, Michigan State are both down. There was a lot of optimism that UI was going to be moved toward the top and maybe challenge OSU. That's not going to happen, if I say so myself. But still, there is optimism about men's basketball. Could you clarify part of revenue bonds you took were maintained? That's a good question. That's unclear to me. I have to see the bond statement. So I'll try to, the question here, I'll try to address that. The recent bond, the bond statement, I'll try to look at the bond statement and see if the purposes are in there. Sometimes they don't get that specific, and I certainly didn't notice it, but I certainly will. The question that's in the chat from Carla P. So got a couple of things to work on here. So the point here is that, yeah, this is gone. From what I read, in the summer, you were talking about fans at UI, but in September, from what again, reading the news on your campus, there's not going to be any students or any people allowed at the football games. Is that accurate? That there won't be any, I want to be clear about, I want to make sure I have that right, that there's not going to be any fans allowed at the home football games that start late October? Yes, no? Because again, I'm just reading news stories. You guys live there. Think so, yeah. So, all right. So I estimated, I heard 2/3 that decline in auxiliary revenue, 20%, worst case 30, best case 10%. It could be higher. Could be. This is just my estimates. I'm estimating $300 million of revenue. I don't think all of this is on the hook, but these are my estimates of what they're going to lose. 30, 60, 90 in a worst case. The CARES Act, which was passed, half of the CARES Act could be spent for anything. Now, I know that you lost some revenue in 20 because the kids all moved out of the dorms, and I have that down here. And the CARES Act could have been spent already, but the university still had it. And I'm combining 20 and 21 here. The other thing, reduced auxiliary expenses. If you don't have some of the kids in housing and dining, you have less food to buy. If you don't have events that you weren't putting on before, you have less food to buy for. So that's the mitigation. That's what that mitigation is. And so when all is said and done, when you take out the mitigation, you add last year's losses, I'm saying you're going to lose about $50 billion in auxiliaries. And considering auxiliaries is about I think that sounds about right to me. When all is said and done, to me, that's worst case. I don't think you're losing anything in tuition revenue in the state. Grants and contracts, I don't see happening as it's changing very much. So what I have here, that's the worst case. These are the unrestricted reserves of UIUC, not the system, just UIUC. They don't need to be doing anything in terms of layoffs, furloughs, no raises, stuff like that. They've got the reserves to deal with the worst case in front of them. You can't spend this every year. You don't want to spend these down every year, but give me a break. This is exactly what reserves are supposed to be for. Have you looked at cost of COVID testing program? Yeah, the additional cost of COVID, a lot of that's going to be covered. A lot of those costs are going to be reimbursed somehow. Yeah, they have cost. I can't imagine. And I read the Bloomberg and the New York Times article. You guys do more testing than anyone in the history of testing. And what happened when you did it, you found that a lot of students had COVID. I saw that a lot of students are they still kind of staying there in the dorms, or are they allowed out? Are the kids allowed out? Yes, no. No one knows. It's loosened up. Okay. You did make national news. You made Bloomberg and the New York Times, in case you guys care, about great testing, but what surprised me is how many, they claimed in the articles that they said in the articles that most of the kids were there. Someone said 2/3. They said the kids were all back, but apparently that's not true. So, all right, let's look at the priorities in the last bit. These are the expenses as they are. There's two different ways of looking at expenses. One is called the functional way: instruction, research, public service, academic support. These definitions are on the iPad's glossary. Just to give you a sense of it, institutional support is all upper level administration. The light green shaded categories are combinations of administration and union people and non-union, and administration and non-union and union. Academic support, for example, includes the deans and the librarians. The librarians are clearly not administration, the deans are. Student services, they both have. So that's why it's hard to make comments about administrative costs with these categories when the light green ones have both elements. The yellow ones do not have any administrative functions in them. The light lime green one is all them. Okay. The other way of looking at expenses is people and everything else. Plant, so someone asked earlier, $194 million spent on what they are calling plant. Utilities, maintenance, those kind of materials to fix things, those kind of things. Depreciation is not a cash cost. It's an estimation of the decline in value of buildings. This plant right here, that's actual money spent on the salaries of the people who work in those areas, plus all the materials and supplies. That's what that is there. Someone had asked about that earlier. And you could see roughly, if you add the salaries and benefits, roughly 2/3 is people, but they have a benefit rate, which is Benefits as a percentage of salaries of 64%. That's just a typical benefit rate is 30%. The AUP salary survey, they add retiree and medical. Retiree and medical costs are 27% of salaries. The other thing I point to here, that's a lot of other. I mean, they break it down like this. They could break this down further if they so like. That's a lot of other. To me, maybe not to you guys, but 619 million seems like a lot of other. In terms of iPads, the reporting here, this is just showing you that they changed their reporting structure. I'm just going to focus for the next 10 slides or so on the salary only component of iPads. Salary only, not just instruction, but all of them. So these are the categories, and these are the salary only. Salary only. The plant salaries are not included here. They're kind of, the plant salaries are assigned to the different categories. How much, that's the way they do it now. Whether that's right or not, I can't tell you. That's the way it's done. But overall, instruction, and I spelled instruction wrong. Overall, the percent to instruction and research goes from 59.6 down to 57.8. Not much change. Institutional support going up a little bit. So public service, hard to know what's going on. We're going to look at that in a second, because that, I'm going to show you in a second why what's going on there. So, all right. This is the percentage change in 14 to 19 in the salary component only. So from 14 to 19, 10% increase in instructional salaries, 5.5% increase in research, a 2% drop in public service salaries, which is hard to understand, but big increases in these categories here. This is pure administration. This is mixture of administration and non-administration. Then I compared to peers. So I took instruction and research and added them together, and then institutional support. You find a very strange result. UIUC has by far, again, this is just UIUC, this is not the system, by far the lowest percentage spent on upper level administration, which seems to go against what everyone thinks. When you add instruction and research, you guys are 8th out of 10. So you're low on this and you're low on this. Well, I said to myself last week, well, what is this? This indicates that UIUC is higher in the other functions. So I don't usually do this, but I had to do it here. So I looked at the other functions. And the function that's the most different is public service. Public service, for most of the other 9 schools, they average 3.3% of the salary. So, you know, the 10% here, the 10%, what does that mean? I want to say what that means. 10% means that 10% of all UIUC salaries are paid to employees in the public service function. That's what that means. The average for the peers is 3.3. So what I believe is happening is that what most peers are putting in institutional support, a lot of those costs UIUC is putting in public service, whatever that's worth. Academic support, UIUC is at 15, everybody else is at 11.4. The deans may have something, the deans are in here. Auxiliaries, you're below average. Student services, almost twice the average. So UIUC shouldn't be that different structurally from these other institutions, but they are. So it's hard to make much of an inference on what's going on there. All right, now we're going to look at the number of people that work here. Where are the police in these expenditures? Let's go right here. These are the different categories here. Where are these are the categories in iPads. I'm not certain where police are. My guess is they're in what's called service occupations, because they do provide a service. This is a very generic management category. These are the non-instructional staff. These are the categories that IPEDS uses. There's 8,300 non-instructional staff in fall 19. So this is last year. I mean, last year's numbers. We don't have this year's numbers yet. And you could see from 14 to 19, there was a 13.8% increase in the number of management employees, 165. There was a big increase in business and finance operation people. There was a big increase in the number of community, legal, sports, media. I can spell that better as well. And what went down? Office and admin support, service occupations, maintenance. I believe my guess is a lot of the SEIU people would be in here where my cursor is. Healthcare and transportation didn't change much. So I know a lot of you who are on this call are here. And so I don't always do this, but Dan had told me you guys would be on here. So I wanted to make sure I gave you the non-instructional employee groups here. So these are the numbers of people. I think Kathy's comment that you public service go into administration. I think yes to what you say in the chat, but I think they would argue we're just following the rules. They are open to interpretation. I usually, when I do these kind of stuff, I usually don't see that kind of difference among these peers that I see here. But these are the average salaries of the different employee groups that I just showed you. So the average management person makes $99,703. The average surface person makes $42,171. Maintenance, the average person makes $71,000, etc. These are the changes over the 6-year period, dollar and percentage. And just in the last ones over here, I just have a change from 19 to 20. I just did this because from 19 to 20, the average management salary went up $3,400 or 3.6%, the largest dollar and percentage change. Graduate assistants are going to be in the instructional category. We're going to get to that. We're going to get there in just bear with me on the graduate stuff. So you can see these increases for the other groups. Everyone's seeing increases in salaries for obvious reasons. Things go up in time. A lot of you have union contracts. I would agree with that. Ricky Baldwin's comment. I would believe that the SEIU folks who are building and food service people, that's my strong guess is right there. That's my strong guess. And if we can go back, if I may. So this is the numbers. Now, not all these are going to be people you represent. There's different, obviously, but if I think one of the things you guys can do is ask them, who are the employees? Where am I? Where is my union in here? Someone asked about anything on Shield T3, the corporation. I have not seen anything about Shield testing. But where do you guys fit in here? And so these are the salaries. And again, I don't always do this, but I wanted to respect you guys. I have great respect for what you guys do. And this is a lot of you guys are on this call, so there you go. I agree with that on Ask Me folks being distributed. But again, I'd want to know where. They should be able to tell you where. So, okay, faculty. Grad students are in here. Where are the grad students? I took this. They do not parse out grad students separately here. This is the way, don't yell at me. I was a graduate student at the University of Chicago, an underpaid one. Part of the organizing group there, we got the grad students organized. I was a grad student worker who's paid. I'm embarrassed to say how much I was paid when I was a grad student teaching in Chicago. So I understand what grad students go through. I went through it myself. And we started yelling about what was going on back when I was there in the early 90s. So there you go. So I'm certainly with you guys, are you guys. I don't make this system up. I have to report what they report. This is going to be the most accurate reporting of who teaches classes at UIUC. So non-tenure system full-time, non-tenure system part-time. My guess is the graduate students are where my cursor is. That is my best guess for where they are. But not always. I don't think if any of you considered full-time, you could be up here. But this is the way it's broken down. What I did down here is I broke down to tenure and tenure track, then the full-time non-tenure track adjunct. They use the word adjunct. Again, I'm using words that they use. I am not, yes, this is number of people. I'm using words that they use. Temp, adjunct, I had not changed. This is not my own terminology. I'm using the exact terminology that's used at this website by this group at UIUC. Again, if people get very sensitive about the names, again, we all use different terminology. I just think it's always best for me to use what they use. In terms of teaching assistants, 2,600, this is what they have here. I don't know what to say to you. This is the grand total faculty. Part-time adjunct, these are the numbers there. And a big increase in full-time non-tenure track and full-time adjunct, as they call them. So they have an 18% increase in enrollment over this time period. This has been met by increasing tenure track faculty by 1%, full-time non-tenure track by 38%, and part-time faculty by 9%. And that's what you see here. This is the org chart. No people's names, but oh my God. So what I did, painstakingly, I looked at what I call the gray book. Others call the gray book. I don't know if you guys call it the gray book. To me, it's always the gray book has the salaries. These are the salaries only as of August 2020. These are, I don't have anyone's names here. I don't think it's necessary for me to do that. I tried to find, and this gray book is for all of UI. I tried to find all the administrators who were plus 200,000. That was kind of the directive given to me. I can't say I was successful in finding every one. I am not including any faculty here. There are faculty who make more than this. I am not including, I didn't try to include any of them. I think I got all the deans of all the colleges here. There's an interim dean in LAS, but if that's accurate, Dan, you would know that if there's an interim dean. You're in English. I assume you'd know if there was an interim dean there. There seems to be one. But I'm going to let you guys stare at this. I'm not going to say anything. You guys know these people. I'm going to let you look at this for a minute or so, if that's okay with you. And I'm going to take a little drink of tea. You guys have any thoughts about these numbers? About these salaries? You happy with them? Not happy with them? Care? Don't care? I was told you guys cared about this kind of stuff. Not happy. Surprised? You guys kind of knew this stuff, right? Definitely not happy. I just thought this was a good way to put it out here. Not surprised, not happy. Definitely not happy, not surprised. Okay. But better to know it, not know it. I know it's not pleasant. And again, I didn't feel it necessary to put people's names on this slide, on this thing. And I know, yeah, this one here was puzzling to me because the numbers were listed twice. I think that's accurate. I really looked at this one. I think that's accurate. Making more than the chancellor. There's the LAS interim dean. Is that right? Did someone tell me is there an interim dean in LAS? Yes, no? Someone out there's got to be from LAS. No? Yes, thank you, Dan. Is the interim dean. I assume you're not it, Dan. You're not that interim dean. I didn't look at the name. I assume it's not you. I could be wrong, but I assume it's not you making 449. No comment. I'm not saying that's justified or not. These salaries are not small. Salaries are not small. All right. So now some faculty stuff. I'm just using all ranks here. And instead of going all the different ranks of professor, I just said all the faculty in one rank. That's the average. This is an average, like 122, 506. That's full professors, associates, assistants, non-tenure track, no rank, visiting, everyone together. And these have been the increases over the last 4 years. Over this 4-year period, just barely beating inflation. And the inflation comes from the Bureau of Labor Statistics. I think that seems to be the best measure I can come up with. This is the salaries versus the peers, the all rank salaries. Dan, I told you this wasn't pretty. I'm sorry, but you said you wanted to see it, so here you go. I don't mean to put anybody down or anything, but you guys are, in 2020, you were 8th. You were 6th in this group in 16, even though I sorted this based on the 2020 salary. You went from 16 to 20, you guys have lost quite a bit of the average faculty went up 14,000. You guys only went up 7,000 and change. So you lost ground. You were 6th, now you're 8th. You were the 9th biggest dollar change and the 8th biggest percentage change from 16 to 20 of your peers. So the levels are low, the changes are low. I'm sorry, but I won't dwell on it. But Dan, you asked, and I don't always give this stuff, but you made clear that you wanted to see it, so here you go. Sorry. Some good news. Degrees keep going up. Very nice, solid graduation rate. Very solid retention rates. This is 1 year. You're losing only 7% of the students in 1 year at a 50,000 place. Undergrad 30,000. Undergrad. That's just amazing to keep that many there. So you guys are doing something right. These are the degrees conferred. Big increases in bachelor's and master's degrees. Oh, unbelievably steady graduation rate over these 5 years. And a good chunk of your kids are graduating in 5 years, but very few stay in the 6-year plan. This is for the peers. I put the Pell rate. Pell Grant is a grant for lower income students and their families. And generally, the higher the graduation rate, the lower the Pell rate. Look at University of Virginia. 94% graduation rate, but the lowest Pell rate of anybody here, 13%. They have fewer low-income students. They have the highest graduation rate. And you guys are a little lower in the graduation rate, a little high on the Pell rate, which makes about sense. You guys are this tells me you guys are right in the middle of the pack in terms of graduation and Pell rates with your peers. Again, I got the two different scales. On the left scale is the graduation rate, and you guys are 80, that's the 85%. On the right scale is the Pell rate, and you guys are about, there's a 20, that guy right there is 23%. So this goes to the right, the blue, or this orange bar goes to the left. Here we go. This may surprise you. You may have been told differently, but these are the facts. Athletics is not taking in as much as they're spending every year for the last 4 years. I don't know if you knew this. I don't know if you thought this. I don't know if you were told this. I don't know what you believe. I'm not suggesting you get out of the Big Ten, but these student fees, this is how athletics is supported. These kids pay this no matter whether they go to a game or not. They pay this whether they go to a sporting event, like sports, care about sports, play sports, doesn't matter, they're paying it. Part of the student fee goes to athletics. This is what's typically done at schools like mine at Eastern Michigan, the Mid-American Conference. It's typically not done in the Big Ten. We'll compare you guys to the other Big Ten. This is the core mission. Basically, this tells me right here how much the student fees go to athletics percentage-wise. I don't know that for sure. I did look and was not successful, but I'll try. Typically, it's 15%, 10%, but Carla P., I will try to find out for you. So just bear with me on that. But I usually have a slide when I do the student fee where I break it down by every fee, but I was not able to do that. UI. So much of your fee information is about the different prices for the different majors / colleges that you're in. I don't know if you guys know this, but there's different prices. Do you guys know that there's different prices depending on what college or major you are? Did you guys know this or not know this? Or do you care? Most of you don't. Yeah. It's not, and it's very confusing, to be honest with you. It also, and the tuition is also different based on when you came, what year you came and the guarantees that was there. It's widely known. Okay, yes. To me, it's messy. It's very messy that they add these fees on. But by the way, these fees are real money. These extra fees are real money. So anyway, this 8.6, this right here, 8652, I'm going to put 8652, 815 equals the subsidy from students and the core mission to support athletics, because athletics does not cover their expenses with their own revenues. Now, football's a different story, and I didn't get into it here. Football does cover their expenses, but the way it works at most Big Tens is football pays for everything else. Football covers their own expenses at UI, but doesn't pay for everything else because the ticket sales aren't big enough. But these are not revenues these are transfers these are coverage. So these are real deficits every year. These are the different individual revenues using the NCAA reports. Look at the media rights. This is to me, this is the Big Ten networks really getting and really starting and getting off the ground. It was around before that, but that in 18 is when the Big Ten went to basically every cable and satellite system in the country, the Big Ten network. I live in Michigan, but I don't know if you guys have ever seen the Big Ten network. I know they have it there. And it is run, and it's run by the conference, so it's kind of fluffy stuff. But anyway, NCAA bowl and Big Ten distributions in the last year, and 19 was the first year they broke it down into bowl and not bowl. For example, this 14 million, a good chunk of this is half of this is from the bowls. The football bowls is roughly half of this, $7 million. U of I got not for that, because when a Big Ten team goes to a bowl, they get a bunch of money and they share it with all the other people, all the other 13 schools in the conference. And whether you go or not, you guys did go last year. I think you went last year or two for the first time in a while. You guys did finally go. Look at it. This ticket sales. I had football ticket sales was 6 million. This is the ticket sales for all the sports combined. Men's, women's basketball, everything else. But as you can see, football is more than half of it. And ticket sales are going down. This is why you need subsidies, because people aren't paying to go. Concessions, parking, there's nothing here. There's just very little revenue on that. You can see the media. This is the media rights jumping up. This is contributions directly to athletics, to UI athletics. Wow, $25 million going right to athletics. All right. A lot here I give you. This is the athletic spending. We're almost done, by the way. Look at the increase in admin staff, athletic admin, coaching salaries in 4 years. Really? I love the other of $6 million. What's other? $6 million. You have all these different expenses. What the F is other? Sorry, my language. What is other? Couldn't they have found one of these other categories? A bunch of categories. Couldn't they have found one of them to put them in? This is my favorite. This meals is the student athletes like going to a hotel, at a hotel the night before a game. The football team does. Because of coronavirus, that's stopping. I think everyone's agreeing that so this should go away. This should go almost to zero. So there you go. Anyway, not all of this, but a lot of this should go to zero. You see, severance payments, sports camps, spirit groups, membership, and all these things. $2.9 million on uniforms. Marketing and promotion, $5.6 million. Travel, this should go way down. Direct overhead and admin expenses, this is a salary. Oh my goodness gracious. I love sports. You guys, I consume it like no one's business. But come on. Do we have to spend this much? That's all I'm saying. If you're going to be, you can't tell me you're laying people off and furloughing people without looking at what's on this screen here. I'm sorry. That's just me. You guys may not agree with me. I know we all love sports, and I know we all love the Illini. I'm not even going to say anything about your mascot. I lived there, and I was living in Illinois. Big Jim Thompson. I was in the '80s when Big Jim Thompson was governor. Remember him? You guys are all too young to remember him. I was a resident of Illinois. So is this money from athletic administration and management tuition money, state funding? He just passed away. This comes from, let me ask the question on where the money is coming from. The majority of it is student fees to pay for it. The athletic, and then there's some from this, institutional support is just the core mission just covering more. But the most of it's coming from the student fee. And so what I have here, three more slides. This is the subsidy, $8.6 million. I compared it to your peers. So this is the dollar subsidy and the percentage. The 7.2%, what does that tell me? The 7.2% means that 7.2% of athletic expenses have to be covered by students and the core mission. That's what that means. And look at the peers. Basically Michigan, Berkeley, and Texas have no subsidies at all. These guys have very small subsidies. UVA's got a fairly high subsidy. Why? They play football in the ACC, and their attendance probably isn't great. And just for the one school that's not on here is University of California, San Diego. They're not Division I football. They're not Division I, so they weren't on there. I just had to do this for I just put the Big Ten in there. You can see Illinois is worse. It has a bigger subsidy than every school but your recent additions to the Big Ten, Rutgers and Maryland. And Rutgers and Maryland Rutgers, give me a break. This should not be happening. But it did. They should not have been in the Big Ten, but it did. This is the spending. You guys spend $120 million in athletics. You spend, Ohio State, Michigan spend $200 million, but they bring more in. You spend less than them, but they don't. Ohio State and Michigan don't need any subsidy at all. So you guys are the third largest subsidy, the third largest percentage subsidy, but the ninth largest in spending. So more than half of the conference is essentially self-supporting. All the pink ones are essentially self-supporting. And even these, I could even add these guys here too, almost. So just Minnesota, Illinois, Maryland, and Rutgers are not self-supporting. Northwestern's not on here. They're a private school. They don't report this stuff. Well, they report it. We don't see it. We can't get it because they're private. Last slide. There'll be a decline in revenues. We could lose some housing revenues, some other costs, et cetera. Hiring, furloughs. No, I don't think so. I think we should make sure the students are having a good experience, even if it's remote. How about doing that? This is exactly what reserves are for. And I think UI, this last one always gets met with trepidation. But I think UI, given the level of debt they have and the bond rating they have, I think if they really needed to, this is a far superior solution than this. To borrow short term, the rates are low. They have a great credit rating. The administration's not going to like this last one, but I stand by it. So I'm done. So I got, I think they can manage the law. There's two questions that I really need to answer that were asked. The purposes in the recent, that I'll try to get to, the purposes of the spending from the recent bond issue in June because it won't be. It's not in the audited statements, so we don't have the and the percentage of the fee that goes to athletics. I'm going to try to answer those questions, and then I got a couple of things I got to fix, spelling issues I got to fix, but I'll try to answer those questions in the next day or so and put them in here if I'm able to. I will look. I did try already on the fee and was not successful because I always want to know that, but on the student fee going to athletics, because that's the main way that athletics is being supported at UI. I don't know if any of the other Big Ten schools other than Maryland and Rutgers that have a student fee for athletics. Because in most of those places, if a student wants to go, now, do students have to pay to go to a football game, or do they get to go for free? Does their ID get them in the game? That's the question I'm asking. Does a student ID get them in the game? You have to pay. No, you have to. So they don't have to pay, or they do have to. So it's not free. So they hit them with the fee, and they have to pay on top of it. At U of M and Ohio State, there's no fee, but the kids have to pay $50 a ticket per game. I assume the tickets are not $50 a game. It could be. I mean, I assume that's not what they charge. But Dave Brandon, who used to run Domino's, was the athletic director at Michigan, and he wanted to make it. You get a $10 student ticket. He wanted to make tickets $100 for a student, and that's what drove him out of this place. Is he wanted to double the price that students were paying to go to games because he thought they'd pay anyway, and they were all rich. Well, that may or may not be true, but it drove him out as athletic director at the University of Michigan. So, any other questions that you guys want to type in or say out loud? Again, those two, the two that I just circled are the ones I'm definitely going to try to address in the very near term. When I say near term, this weekend, not certain on that one. Looking in the chat, I know it's been almost 2 hours. You guys have been good to hang in with me. Before I know, you guys will have left me. No, you guys are hung in there. Have you seen anything on chairs? Our MBA is one of them, part of a firm with $4 billion of assets. Two of the chairs, yeah, doesn't surprise me. Are they talking furloughs and layoffs? Because I don't. Are they or are they just talking no raises? That's the question I'm asking. No raises, no hiring. No hazard pay. I was surprised that tuition went up even 2%. When is good question? Tommy asked, when have reserves been used in the past? Then let me address. Can I address the? I want to address Tommy Tang's question on reserves being used. Very few, if any, universities are going to make a declarative statement saying we're going to use reserves. What they do is they borrow. University of Arizona, University of Michigan, in the last 2 months, have both approved large borrowings. Borrowings have to be repaid. They, in essence, get repaid out of reserves. The difference between borrowing and just taking your reserves, when you use reserves, you probably have to sell some stock or take money out of your bank account to pay for things. With the borrowing, you get the money up front, and then you pay it back over time, and you have a little more control over how that money is paid back, and the interest rate's going to be really low. So they're never going to say, so someone's asked me, the question's a good one, they ever use reserves. When you look at reserves, all we see is that they've been going up at UI. There could have been situations where they tapped into those reserves temporarily. We don't know that, but if we see the unrestricted reserves from 20 to 21 coming down, or even from 19 to 20 when the financial statements come out next month, Tommy, that will be the best answer of did they use them last year? So when the audited statements for the UI system come out, your borrowing means taking in debt. Hospitals are loss leader at U of M. That's not true. It's a complicated story at UIC. Obviously, I've been there and talked to them. It's complicated as to whether they're not a loss leader at U of M, no matter what they say, because there's a lot of mitigation when you got medical stuff going on, the federal government, even the CARES Act and outside of the CARES Act, have been covering a lot of things. The hospitals lost a lot of revenue when they stopped doing elective surgeries and other procedures that were not so elective. But in terms of what Tommy asked, I think we're going to know a lot when we see the 20 statements whether those unrestricted reserves went down. They'll never, Tommy, all this, they never want to say out loud, oh, we're using reserves. They don't want to ever admit that they're using them. But the borrowing of money is an admission that they're using them. I don't think they're going to borrow here. I think they have enough. They look at that. I mean, if early on in the presentation, all those budgets of strategic positioning, $10 million things, that's all, no offense, that's complete discretionary funds that they set aside to do whatever they want. So they have the reserves in real cash and investments. They have a budgetary process which allows them the flexibility to use those reserves for temporary losses in revenue or increases in expenses. College is supposed to be self-supporting. I don't know. I can't say it's a loss leader. It is too early to tell with the data that's there whether it's a loss leader or not. 300 million losses he's claiming in COVID. Oh my goodness gracious. I'm just not seeing that at all. I am just not seeing that at all. I don't see any loss in tuition or state money. I don't see it. Yeah, there's housing money. Yeah, there's increased testing. I'm not 300 million. There's no way. Typical across institutions. They all overestimate what it's going to be. Look what's happened. Why do you think the appropriation to UI is flat in 21? Because the state did better than they thought. Institutions like colleges and universities and states have all lost a lot less than they thought they were going to lose. That's the bottom line. And even if it was 300 million, oh my God, even if it was 300 million, which it's not, you still got the reserves to deal with it. There's almost $900 million in unrestricted reserves. Again, what are they going to say? Let me be clear. They're going to say that 870 million is not real. It's in the departments. It's tied up. We can't spend it. It'd be prudent. We'd be hurting ourselves if we spend it. None of that is true. They can spend it if they want. They have complete discretion if they want to spend it. Now, to me, if I'm running this place, I'm not laying anybody off. I'm not stopping hiring. When I see enrollment went up, enrollment in fall 20 is higher than fall 19. Who's going to teach these students? Who's going to service these students? Someone in the chat said that 2/3 of the dorms are filled. Well, someone's got to take care of these kids. So someone's got to clean up after them. Someone's got to feed them. Someone's got to watch over them. These things need to happen, and they've got the resources to do it. This place has been doing very well financially. They've been using the state as a crutch, as an excuse to not give raises, to not pay people, and they're using it now again. And I had it, Dan, we talked about this last week. The state bond rating is what it is. I mean, you can't get away from that. I had to show you guys that, as painful as that is to look at. That Illinois has the lowest bond rating of any state in the country, by far. Why, from an economic perspective, were they so keen for in-person instruction, bringing back everyone? They want the revenue. They want the dorm revenue. They want the housing revenue. They want all the other auxiliary revenue. All the universities just think. And they also don't want to get into an argument over should we have to lower tuition because the kids aren't getting the same experience. That's a big one. They want to make sure that they don't have to lower tuition. And I don't think they did here. I mean, I read that they increased tuition 2%. Maybe I'm wrong. Maybe they reneged on that. Illinois has the lowest bond rating of any state. Lowest is what I meant to say. Yeah, I think the public safety is broken down by service. I could break down that, that police institute. It's basically half and half. Someone asked, let me see if I can go back. Let me see if I can go back to that page. Where's the budget stuff? That's my dog barking, by the way, in case you're wondering. Oh, the budget's back here. Here, public safety, right here. If you wanted to know how much of the 14 million is people, so I could break down, the budget does break down the 14 million into people and stuff. It's almost, as I remember looking at it, it's almost 50-50. Of this amount, from what I remember, half of it is people and half of it is stuff. But if you like, I can break that down. In a budget, there are two categories related to public safety. I'll show you. Well, this is the way this is the public safety budget that's in the actual budget. Fire Service Institute. I need to spell fire service right. And Police Training Institute, departmental activity. These are the things they're spending money on. Do you know anything about engineering business trying to insure against loss of international students and how they played out? Insure against? All I know is enrollment's up. And, you know, let me get to the enrollment numbers by college. Engineering enrollment, fall 20 versus fall 19 is up. Business, fall 20 versus fall 19 is up. Fall 20 versus fall 19. So any complaints about we need to worry about insurance, their total enrollment, this is the enrollment in engineering and business. They're both up fall 20 over fall 19. To me, isn't that enough? What else do you need to know? They bought insurance. What for? What is that? Bought insurance for what? You have more students. They worried Trump would. Yeah, you did lose international students, but you gained other students. So enrollment's up. Yeah, that's all. That's all that matters. Total in these colleges right here. Significantly, 1,000 in business. Where do these students just are these made up numbers? I don't believe they are. You saw the news story. Everyone's happy. These kids are here. And from what I read in the Bloomberg story and the New York Times story, they're in Urbana, going to the bars. Apparently, there's a lot of partying going on. So, but that's obviously something different. Anything else you guys got for me? Number one party school. Thank you. You're welcome. Okay. A little horrifying. I don't know about that.
Thank you so much, Howard. This is Dan.
Yeah.
This has been just an incredibly enlightening and helpful.
So, Dan, hopefully tonight or tomorrow, I'll fix up the couple of things like spelling Fire Institute wrong. And I'll try to find out those three things. So on that one slide on the police, I'll try to add a box on how much is personnel, how much is actually spent on personnel in public safety, as opposed to just total dollars on stuff. I'll add that because I'm almost certain that's in that 20 budget. And I'll look at that. And I'll try to find those other two questions and incorporate those into the slides somehow. Yeah, athletics is. I think the 8 versus the 14 million is the restricted versus. I mean, to me, this whole thing between restricted and unrestricted funds is complete crap, garbage. And the administrators hang their hats on that stuff. It's money they could. I don't want to hear between unrestricted and restricted funds. They could spend whatever they want. I don't want to hear it. I just add them together. Those restrictions are complete crap. So totals are what matter, not Stoley really wants in. We have a Samoyed, by the way, in case you guys know what a Samoyed is. He's very much interested in coming over. All right, anything else before I bid farewell, and who knows what I'll do. But
Thank you so much, Howard. Really, we're
right.
very, very grateful.
All right, I'm stopping my share and I'm leaving. Bye, guys.
Okay, see ya. Thanks everybody for being here. Anybody who's still here.